Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. The global banking sector is entering an era of profound transformation, and at the center of this shift is a digital asset that many have overlooked for years, XRP. Once dismissed by critics as a fringe cryptocurrency, XRP is now emerging as a pivotal tool in addressing some of the most pressing liquidity and operational challenges faced by banks worldwide. Analysts argue that the combination of XRP's on-demand liquidity, technology, tokenization, and capabilities and integration with institutional-grade ETFs is not only reshaping traditional finance, but also may unlock billions in previously dormant capital. Over the past several weeks, unprecedented activity has been observed in the repurchase markets. According to the market data, major U.S. banks have recently injected tens of billions of dollars in Treasury and mortgage-backed securities into overnight repo agreements. For instance, the latest reports indicate that banks pledged $29 billion in treasuries alongside an additional $20.9 billion in mortgage-backed securities, effectively borrowing short-term cash against high-quality collateral. While these maneuvers are part of a normal liquidity management, the sheer scale highlights the tightening pressures within the banking system. Analysts note that with the ongoing government shutdowns and the uncertainty in the fiscal flows, the first weeks of November could present significant liquidity stress points if governmental distributions are delayed. The liquidity challenge is not confined to the United States. Across the Atlantic, UK banks have recently borrowed £97.9 billion from the Bank of England's short-term facilities, a record surpassing previous highs by nearly £10 billion. Such figures underscore a wider structural issue in banking. While banks hold large amounts of assets on paper, the need for immediate usable cash to meet obligations is creating pressure points that ripple through global finance. Against this backdrop, financial observers have highlighted Warren Buffett's Berkshire Hathaway, which currently maintains a record-high cash balance of $381 billion. Notably, this sum closely mirrors the total unrealized losses held by commercial banks across treasuries and mortgage-backed securities. This is striking. While banks face latent exposure, some institutional investors sit on a record liquidity posed to deploy capital strategically. It is precisely within that dynamic that XRP's potential role becomes evident. Ripple, the company behind XRP, has developed systems such as on-demand liquidity, ODL, that allow financial institutions to free up previously locked-up capital. Instead of pre-funding accounts for cross-border transactions, XRP enables instantaneous liquidity transfers between entities, effectively turning dormant reserves into actively deployable capital. Several large financial institutions have already tested these systems, demonstrating that XRP can move tens of billions in real time, reducing reliance on cumbersome pre-funded mechanisms and mitigating the strain in traditional liquidity channels. Further augmenting XRP's utility is the rise of tokenized assets and stablecoins. Institutional interest in tokenized securities and stablecoin-backed ETFs is increasing rapidly as major Wall Street players recognize the efficiency and transparency benefits of these digital instruments. At the recent Future Investment Conference in the Middle East, Jamie Dimon of JP Morgan and Larry Fink of BlackRock openly discussed crypto integration with prominent industry peers. Their acknowledgement signals a broader acceptance that digital assets are here to stay and that the financial ecosystem must adapt accordingly. In New York, the annual Ripple Swell Conference is poised to be a pivotal moment for this ecosystem. Representatives from banks and institutional partners will convene to discuss the tokenization of real-world assets on the XRP Ledger. Plans include tokenization, bonds, money market, funds, deposit-backed stablecoins. In New York, the annual Ripple Swell Conference is poised to be a pivotal moment for the ecosystem. Representatives from banks and institutional partners will convene to discuss the tokenization of real-world assets on the XRP Ledger. Plans include tokenizing bonds, money market funds, and deposit-backed stablecoins. BlackRock, Vanguard, and other large asset managers are reportedly exploring these initiatives, which would allow trillions of dollars in institutional capital to interface directly with blockchain-based liquidity infrastructure. Analysts suggest that this could dramatically enhance asset efficiency, reduce settlement times, and improve systematic transparency across markets. The Federal Reserve is closely monitoring these developments. In the past week, the Fed signaled an end to the quantitative tightening starting December 1st, while delivering an unexpected rate cut to stabilize liquidity. Market strategists interpret these moves as preparatory steps for potential quantitative easing, alternative liquidity measures if systematic stress increases. Historically, when banks face liquidity shortfalls, programs such as the Bank Term Funding Program in 2023 have been deployed to support regional banks and prevent contagion. XRP combined with tokenized ETFs represent a complementary mechanism. Rather than relying solely on central bank interventions, institutions could leverage blockchain, enable liquidity to shore up operations efficiently. ETF activity in the crypto space further validates this trend. For instance, the Bitwise Solana Spot ETF recently recorded inflows of $417 million in its first week, outperforming comparable Bitcoin and Ethereum ETFs. Similarly, XRP-focused ETFs are now entering regulatory approval stages, with Canary Capital and Bitwise leading filings under the Securities Act of 1933. Once live, these products will enable institutional and retail investors alike to gain exposure to XRP through fully regulated channels, potentially driving hundreds of millions, if not billions, in fresh capital flows into the ecosystem. Analysts highlight the compounding effect of these inflows. Even moderate capital deployment can expand XRP's market cap substantially, amplifying liquidity efficiency for participating banks and institutions. Across global banking, some institutions are already reducing balance sheet stress. Bank of America, for example, has successfully decreased its unrealized losses on treasury holdings by billions early this year. The pattern indicates the financial entities aligned with Ripple's XRP Ledger solutions are positioned to navigate volatility more confidently. Executives from partner banks often express a heightened level of assurance when discussing Ripple's infrastructure, highlighting the practical benefits of integrating digital asset solutions into legacy systems. Moreover, tokenization initiatives are expanding beyond simple stablecoin deployment. Ripple's blueprint includes mechanisms for converting traditional securities, mutual funds, and corporate bonds into ledger-based representations, which can be securely held, settled, and traded on-chain. The potential implications are enormous. Trillions in previously static capital become dynamically accessible, creating new efficiencies and reducing systematic risk in cross-border payment and settlement channels. Liquidity management, however, is only one part of the equation. The broader adoption of ETFs, tokenized instruments, and blockchain-native assets is posed to reshape investor behavior. Institutional inflows will not only support XRP's price performance, but also signal a wider transition towards digital integration in banking. Analysts anticipate that as more XRP ETFs launch and tokenized products gain traction, a feedback loop will emerge. Higher liquidity efficiency encourages more institutional participation, which in turn drives greater acceptance of blockchain-based solutions across traditional finance. Regulatory developments remain a critical component of this evolution. The SEC continues to review spot ETF filings, and market participants are closely monitoring government shutdowns and fiscal policies for potential impacts on approval timeline. Once regulatory green lights are secured, multiple XRP spot ETFs could be launched simultaneously, creating unprecedented access for retirement accounts, institutional investors, and asset managers. The availability of XRP via regulated ETFs offers a bridge for conservative capital seeking digital asset exposure while remaining fully compliant with existing financial regulations. On a macroeconomic scale, Ripple's infrastructure addresses systematic vulnerabilities revealed in recent liquidity strains. By facilitating real-time settlement, reducing pre-funded capital requirements, and enabling tokenized asset management, XRP effectively acts as both a liquidity amplifier and a risk mitigator. Analysts note that while XRP alone cannot resolve all structural channels, by facilitating real-time settlement, reducing pre-funded capital requirements, and enabling tokenized asset management, XRP effectively acts as both a liquidity amplifier and a risk mitigator. Analysts note that while XRP alone cannot resolve all structural challenges in global banking, its adoption significantly strengthens the operational toolkit available to financial institutions, particularly when integrated alongside traditional central bank interventions. Looking ahead, the coming weeks are expected to be highly consequential. With Ripple's Swell Conference, the imminent launch of multiple XRP ETFs, and ongoing discussions among top banking executives, market observers anticipate accelerated institutional participation. The confluence of tokenized assets, regulatory approval, and high-profile partnerships is creating a pivot point in global finance. Analysts project that XRP's role in facilitating liquidity and operational efficiency could translate into meaningful market movements with both short-term inflows and long-term strategic adoption shaping the landscape. Despite these optimistic signals, caution remains warranted. Some regional banks are still managing stress from unrealized losses, and private credit markets exhibit signs of fragmentation. Strategic liquidity management, carefully regulatory navigation, and incremental adoption of tokenized solutions are key to sustaining momentum. Experts emphasize that institutions must balance enthusiasm for blockchain integration with prudent risk assessment, ensuring that digital asset deployment complements existing financial safeguards. So in conclusion, XRP is no longer a peripheral player in the digital asset ecosystem. It has become a central actor in modern financial operations. Its integration with Ripple's on-demand liquidity, combined with the rise of tokenized ETFs and institutional adoption, provides a framework for addressing real-world liquidity challenges while unlocking substantial dormant capital. The next several weeks, particularly the Swell Conference in New York and the launch of multiple XRP ETFs, are poised to showcase how blockchain technology can enhance efficiency, transparency, and resiliency in banking. Analysts and market observers agree. The era of digital asset-enabled banking has arrived, and XRP stands at the forefront, bridging the gap between legacy finance and the future of tokenized, efficient, and global interoperable capital flows. Thanks for watching, and I'll see you in the next episode of the Crypto Republic. If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.